Last week we were talking about investors, talking about $1 million loans, people with high credit, 25, 30% down, people making $1 million a year or more, paying all cash. That was last week. Today we're going to get down and dirty. Let's talk about real people buying homes. You often hear in my conversation with you, and we'll talk about the extremes. We'll go from the very wealthy, now we go down to the people. The average person in Ventura County, family income is about $75,000 a year. We're going to start with people with income of less than half of that buying homes, and we're in the process of doing that right now. We're talking about real people buying homes. They or maybe refinancing, trying to save money. People with limited income, sometimes a limited down payment, very average credit, if not just plain poor credit. We always talk about the extremes. Why? Because you may not be at one end or the other. You're somewhere in the middle like everybody else. We can handle it from one way or the other. There's all kind of ways of doing it. When you have $1 million income and buying $1 million houses, you need to come up with a big down payment. You need to have near perfect credit. But I'm talking about the rest of the population, you and me. We have a few problems, and yet we're able to get it done for you. Reading in the paper the other day, the average person who rents has a savings of about $4,000. The average person that owns a house has a net savings and net assets over $200,000. We would like to get you into that ownership category anyway. So let's talk about maybe if we can understand it better, we figure out a way we might just be able to do it. Now, I make a statement that I can finance everybody or almost everybody, and let's talk about who we can't. It's really very simple. I don't finance out-of-state properties. You got to be here in California. And I don't do mobile homes. I don't finance bare land. Now, I don't care what your credit issue is in the past. You can have bankruptcies, foreclosures, judgments, repossessions, tax liens. You owe the IRS, all kind of problems, especially if it's about 2 years in the past. But presently, you're late on a payment of $10 or somebody. That might cause you a problem right now, and we have that all the time. In the last few months, 3 or 4 months, we've been turned down and had to go back and redo people who all of a sudden became $7 late on a credit account. Somebody who had a $10 and a $25 account, they got late on. We had to postpone them refinancing. Things like that will really, really affect your credit. But tell me somebody who's had all these real serious problems in the past, we're all set up to help you. I have to tell you, we have a conservative approach. When you listen to me, you say, this guy's wild, he's weird. Well, he may be a little bit wild and weird, but we're really very conservative. We want to get you the best loan. We're talking about 30-year fixed-rate loans at the best deal possible for you. We have a passion to help people, and we explain the complex issues, and we try to limit all the fears you have. People do not realize of all the special programs that are out there that you might be able to take benefit of, and we're here to try to help you with those. That's why we want to gather all the information. Dealing with clients who come to me, and they're often people will say, we're praying we need somebody to help us. We've been hoping you're the one that can do it. And as I start asking questions and start putting it together, it starts to make sense to me and then to them. Recently, I had all kind of people with all kind of financial problems, too much money and too little money, temporary problems where they had to resolve it and do whatever it takes to get things done. And we have to help people out of that circumstance to get them into the very best. There is a time to move ahead, and we think this is the time. We're here to help you. When we meet with you, the first thing we look at is your credit report. Why? Because your FICO score, your credit report, is going to determine whether you can get a loan or not, and whether or not you're going to get the best loan, what you're going to pay for your interest rate. You can go into your bank. They have a sign outside. Here's what they charge. And then, of course, there's a slight extra charge because your credit score is just a little bit off. You know, banks really, businesses love people whose credit is not perfect. If your credit is really bad, they can't finance you. They can't sell you some. But if your credit is just a little bit off, we can charge you a little bit extra. We can charge you a little bit more on your thing. We don't want to do that. We want to get you the best deal. Now you have to understand that probably the thing that we're doing the most business on today are the complex things. We're doing a lot of business with people that we've done business with before, coming back to us or bringing their family or their friends. But a lot of we're getting business. They've been turned down by their bank for strange reasons. I mean, if I told you the last week the list of people that have been turned down and called me, and it makes no sense why they were turned down until we look at it. Here's an interesting thing. I have 2 people I turned down the other day. Why? They can buy any house they want in Ventura County, but they can't buy that house. That house is the problem. We can finance you. We can't finance that house. And that's a problem. That's an issue. A lot of people don't understand that for different reasons. Sometimes we can get around it. Sometimes we can't. It just depends.
You know what I find fascinating, Bob, is that when you're turned down, the bank is under no obligation to tell you why you're turned down. I just, to me, it's amazing.
That's not, legally they are, but they don't. And that's the thing. First of all,
okay.
here's one of the problems. Here's the basic problem. You have, what is that, a 777 on your forehead? Your FICO score is 777. Interesting number. Everybody walks around with his credit score tattooed on their forehead. They should, because that's what the banks look at. Why do they do that? If you are one of the major banks and you're trying to hire people and train them to be mortgage loan officers, and the average loan officer working for a bank has been there less than 5 years, when I talk to friends in the business and I'll ask them questions, I want to talk to one of my friends who's been doing it 20 years or more. My people have been doing business for more than 10 years. Everybody around here, we're very experienced. It takes a long time to learn what we do. And how you think you can hire somebody and do a week or 2 of training, and they're going to understand your complete complex financial thing, when it's so easy to say, what is his number? Because everything depends on that. What's the number? Just give me his number. Then we can tell you whether we can do it or not. After all, that's the way the banks sell their loans. When the state of California buys $100 million worth of loans from one of the major banks, mortgage loans, they're sold on the fact that what is the score? Everybody is over, say, a 680. Fine. Now we know what we can pay you, bank, for that. We'll let you process and collect it, and that's how you earn your money. We don't want to do that. So we'll still say the bank on it. You still say pay the payment to Chase or to Wells or the Bank of America. But the money is held, and the loan is held by, say, state of California or some large insurance company. And they buy it according to a credit score as much as anything else, and other rules that they follow. But that's the basic thing. So when we get a credit score from somebody, that's only a very small part, maybe the most important part of the credit report, depends how you look at it, but a very small part. And the bank employee can accept or turn down the file depending on what the score is. That's the beginning. And then you need to understand what's behind the score. Your score can be really great or really poor for almost this very complex thing, and it doesn't tell the real story. We look beyond the real story. So when I get a file, been turned down by the bank, the score is not the best like the bank wants. We take a look at it, try to improve the score, and understand why is the score that number. And we see the answer. We're trying to prove to the underwriter of the bank, the new bank we go to, why this borrower is excellent, why they pay their bills on time, and explain to them up front why the score is off. It's no big deal. Why? Explain it. We have to understand it. Your underwriter